Hey, traders. There was a good Euro USD bus today, my usual bus at the New York Open, and I missed it. But I missed it because I was being extra cautious, needlessly, but cautious nonetheless, because it's NFP week, and you can expect the unexpected in the markets up until NFP. It can be kind of herky-jerky sometimes. But today, I missed my bus, but I want to go over that bus ride to you because I want you to catch that bus with me. I want you to catch that bus with me tomorrow, all right? And the day after. That bus comes, and we need to be on that bus, but you got to recognize where the bus stop is, okay? And I'm going to help you with that today. We're going to use the magic of replay. Now, first of all, let's get to the 15-minute so I can tell you, so I can find our point where we'll take away some candles. I'm putting on the session breaks, and this is the New York session. This is the one I want to take off. So I'm looking for replay, and I'm going to take off right at 8 o'clock. Why didn't you go? I don't understand. Okay, there you go. All right. Now, first of all, first thing we want to do, go to the higher time frames. Go to 4 hours. 4 hours, plenty good, plenty good. All right. Why? Because we want to establish where the order blocks are. Price flows from supply to demand, from demand to supply, from bearish order block to bullish, and then back to bearish, okay? So as long as we know what the block flow is, whether it's bullish or bearish in momentum, you know, then we know on the lower time frames how to take, when to take a buy, when to take sells. There are times where you just don't look for sells, even though price is moving up, because you know you're moving towards supply. Yeah, you know, just don't get all caught up in the caught up. That's all I'm saying. All right. What do we have here? We have a bearish order block here. All right. And we're going to mark that bearish order block on the 4 hour. That's a pretty strong time frame. All right. Now we want to see, we have price in the middle. We say, okay, this is the nearest bearish order block, and this is the this one has potential to reverse price. How do I know that? Because of the way price left that order block very aggressively. All right. You didn't want to choose this one. Why? Because it didn't accomplish anything. It just said right there. That's it. All right. You don't want that one. It didn't accomplish much. Didn't break lows. This one broke these candlewick lows. Got it? On lower time frames, that is structure. Those wicks are actual candles, and they are structure. All right, so it did accomplish something. Now we come down here. Where's the bullish one? We can go down here. This bullish one broke the high of this bearish candle here. All right, that's nice, but it's not near price. This is the last one, nearest price. So we're going to mark this one. Okay, from point A to point B, from point B to point A. Yeah, digging to me. All right, now I want to make sure that's in the right color. Bullish. Okay. All right. So we have a point A and a point B. This is the way price likes to flow. All right. Now we want to recognize on the higher time frames that this is a bearish leg. All right. A big old bearish leg. And we just broke structure here to the downside, which means what? We're looking for a return to impulse. What does that mean? A return to impulse. That means price is going to return to the order block that sent price to break that structure point in the first place. Okay. We look for it on every time frame. So price has a reason to go upstairs. We want to find what the incentive is. What is the motivation for price to go up there? What is price trying to accomplish? That's the question that should always be in your head. Okay. Now we have a reason that price might want to go up here and test that order block, because it broke structure to the downside, and we're going to see a return to impulse. This might be that impulsing order block. Okay. One, also missing price. What some people call a fair value gap. All right. Or an imbalance. All right. You see the imbalances here. All right. How do you measure the imbalance? By the wick on either side of the candlestick in question. All right. This is you see these bearish candles? That is the inefficient move of price. All sells, all sellers. All right. Price doesn't like to move that way. It'll come back and mitigate all of these imbalances, because you have to have buyers for sellers and sellers for buyers. The strong hands can only change the market switches from strong hand to weak hands, from weak hands to strong hands, from buyers to sellers, from sellers to buyers. There has to be a balance. All right. And that requires the efficient move of price. When it's inefficient, it comes back to balance it out. You understand? That's just a way of looking at it. Okay. Now, so we have another incentive for price to come up to this order block. Imbalances to resolve. All right. These are mitigations. All right. So we have in our minds already that price is heading up. All right. Now, I want to also point out down here, we broke this high. All right. That is a break of structure. Why we call it a break of structure as opposed to just a break of a short-term high or a swing high. Because when we talk about structure, we're talking about lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is a 2-candle pullback. That means it's a valid lower high. This is not a valid lower high. There's only 1 candle pullback. So price really, after this lower high is made, this lower low, lower high, the next lower low is beyond this point. Got it? Not this. That's a swing low. The next lower, the next structural point for a lower high is the one after this point. Okay. Follow me now. So what do we have here? We have lower low, lower high. What is this? Nope. It's just swing low, swing high, swing high, swing low, swing high, swing low, swing high. All the way down here. That's what this is. One leg of structure. And then you have the lower high, lower low. We broke this structural point. That means price is going to return at some point to the impulsing order block that sent it past this the structural point. It works the same way on every time frame. Just bear that in mind. We have the big higher time frame break of structure, and we have the smaller time frame break of structure. We're going to look for price at some point to return here. This is an impulse to the downside, and we are in retracement. We see that this is a bearish market, so we know that this is a retracement. Are we going to turn around all the way over here and break this order block? We don't know, but we know price has reason to go up higher. That's all we want to establish. Now, let's go down to the 1 hour. Do we see something here? I have my session divider up separate. All right, this is the London session. This is a New York session, and we're expecting that New York session to come here. All right, so we see price is making its way up. All right, we want to make note of the order blocks. All right, why are we making note of those order blocks? Because we're seeing that price respects the bullish order blocks going up. This is block flow. Okay, as long as this creating and respecting bullish order blocks, we know that price will continue higher and that these are making higher highs, higher lows, higher high, higher low. As long as we don't break them on the way down, we know that we have bullish momentum and that we should be just looking for buys. Buys are safest, right? Until we see price transition somewhere. And we also see the imbalances overhead before we get to that block. So we got a good ways to go. All right. Let's go down to the 15-minute. Do we see anything? All right. We see that price is respecting these order blocks, bullish order blocks. It would break the highs, break these highs here, come back, retest, return to impulse, and then continue on higher. Did it again here, broke that high, came back, retest the impulsing order block, and continued higher. These are things you have to be aware of. All right, you have to be aware of. So let's continue. Let's go to the 5-minute, and we're going to see what the new session is going to bring. All right, we see bullish continuation patterns here. These are bullish order blocks, and it looks like buys all the way up, right? This is the new session. And we see price opened up bullishly. Okay, great. That's great. All right. It's been bullish the whole London session. So we know that it has room to go to the top, right? The next candle is a bearish one. Okay, now I want to say, ooh, let's take a closer look at this. We go down to the 1 minute, all right? And we want to make sure that we're on the right side of the momentum, all right? We see this bearish, looks like a bearish engulfer, right? But is it a true bearish engulfer? No, because price didn't go past it. It's a low point. It's a low. All right. So the next candle comes up. This is a 2-candle engulfer. All right. This is a variation on the bullish engulfer. All right. And we can see that bullish momentum is being maintained. All right. Up until here. Then we get this bearish candle. Now, you want to make note. This is a bearish candle, made a bearish engulfer here. This is a bearish candle. It came down. This is a bearish candle that broke the lows here, just like it broke those lows here. And then we see these bullish candles coming up behind it. Now, what I'm going to make note of is, does it break when this price point at the top of this candle is broken? Then I'm not worried about this being a bearish engulfer or a bearish order block. All right, price is still moving bullishly. And what am I waiting on? All right, I'm always going through the times, time frames to make sure I make note of where's the last order block. Like I would have made note here. All right, I would have made note here if I was up trading at this time. All right, I'm going to make note of this one. All right, is there a chance price could come down here and test that? That's what I'm always, that's the one thing that's always on my mind, is price going to come back and test that. If it does, it's going with the flow of traffic and the flow of momentum, and this would make a great buy as far as I'm concerned. All right, so I'm going to keep that in mind on the 5-minute time frame. Right, I'm going back to the 1 minute. All right, click ahead. Price is making dojis. We got some bearish. We got one bearish candle. Price isn't moving just yet. Price isn't moving. Isn't coming down. Isn't breaking this low. So I'm not really worried. You know, I'm just watching price now. All right, clicking ahead. Now we see price getting some full-bodied bullish candles. All right. Am I going to make note of this one here? This bullish candle? Of course I am. What am I, a schmuck on wheels? Look, you gotta make note of these things, man, because price could easily come down here and make a tap for a test of this bullish order block, and we can catch a trade going up. All right, That's what I would. That's what I'm doing now. We get made equal highs here. It looks like it could be a candle that just wants to take liquidity, but no, we have a close above it. We have a close above it that invalidates any hope of this being a bearish candle or a point where price will reverse. All right. So what does it mean though? What does it mean though? We see that price has broken this high. All right. So I am looking for price to possibly come down and then go back up, because as a return to impulse. All right. We broke that high. We're going to continue to track it. All right. We see exhaustion to the downside. When I see wicks, there ain't no wicks up here. There's wicks down here. All right. So I'm not scared that price is going to return or anything just yet. All right. We're on the 1 minute and we seem to be going a little bit higher. All right. We still got wicks on the bottom here. But I want to make sure that price isn't transitioning on me. All right. I'm making note of this high here. I'm making note of this high here, this high. All right. I want to keep an eye out for this kind of transition. All right. Where you get a left shoulder, a head, and a right shoulder. All right. You can call it a head shoulders if you want to. You can call it a quasi. But that's what I want to make sure of. I want to look for, because that indicates price is transitioning from bullish to bearish momentum, and I would have to start looking for sells. But is price coming down here to give me an entry for a long? That's what I did. These are the things that I have running through my head. All right. Look at these wicks. The wicks to the bottom. They're holding up, and price just closed a bullish order block here. We go past this high, that's a valid order block, and I'm going to make note of it. All right, we open up with an equal candle, equal bearish candle there, and we have a wick to the top side. Oh, look at that, doggone it! Now, should I have jumped in for a buy trade there? No, there's no confirmation for a buy there. If you said, oh well, it was a bullish order block and this is the retest, yeah, I guess if you want to be extra aggressive, you can do that. I'm not doing that. All right. So we have this going up. All right. We have a bullish order block here that I'm going to make note of. Boom. And we're going to see if price is going to continue to climb. This is a 1 minute order block. So, I don't have, I don't, they don't mean as much to me because they can be very, price could go right through these things. That's all I'm saying. All right. So we're going up. Now I'm looking for price to transition for me. Should I have seen anything here to take a trade yet? No, I don't see anything. All right. But we did break higher. So I'm looking for a return to impulse, and then maybe I can take a buy order, which is according to the bullish momentum here. Here we come. Look at that. Okay. Now, this is something that's giving me some intrigue. Why? Because I see these wicks, first of all, and there's a point here. A point here where we broke higher. All right. We got another point here. I get one more point, man. I'm thinking, hey, we're transitioning and I don't want to get caught out there. All right. But we'll get clues. You wait, you be patient. You'll get indications. Just because we get points and everything doesn't mean that it's time to jump in. You just want to make note of those points. You want to make note of the order blocks. What time is it? Oh man, look at that. Did I go too far? We did not touch for a return to impulse. I would have felt bad if we did, but there was no way to catch this There was no way to catch that push up. All right. And that's all right. But what we want to make note of, we did get a push. We did get a point there. Okay. And here we go. What time is it now? Oh man, look at that. 8:29. This is about that time. I'm in the window. I look between, if it doesn't happen within, if I'm not in a trade within the first hour, the 45 minutes to an hour, the closer I get to that hour, I'm thinking the bus is gone. Okay. But we're well within the time frame. But look at this here. All right. This is a even star formation, and this is a turning point on the higher time frame of 2 minute, 3 minute. This will be this is a pretty bearish formation. Okay, but we have a point here. We have another point here. I'm looking at this bearish engulfer that just closed. I'm going to keep this in mind at this height. Look at that. I'll put it here. Okay. So now this is what we're looking at. Right? I want to rifle through my time frames and see, am I missing something? All right. All we have is these full-bodied candles going up to the highs. All right. And we are getting closer to that imbalance. All right. But we are still following bullish block flow. Right. So I'm keeping that in mind. That's what I'm doing the whole time I'm watching this. Okay. I don't have any order blocks here. I have one here. Look how much time spent at this level. And then we look at the one behind it. This is a response to that one. These are the things you want to keep in mind. What did these order blocks accomplish? Okay. So I'm watching this. All right. Let me see what the next candle says. Oh, we are down to this order block already. And that is a full point. A full point. Ooh, okay. So now I'm looking at this order block right here, folks. This one for a revisit to take a short on. This has broken a couple of lows here. You see that, right? Look at this. There are a couple of lows broken in that. This order block has accomplished something. All right, and we are touching on this order block here. Now, I'm looking for a transition. I'm looking for a positive transition. Would I take a bullish, would I take a buy here off of this order block? That's not something I'm attracted to. Why does that look so different over here? Let me get back to that 3 minute. All right, we've made a bearish engulfer. So on the 3 minute, so a test of this engulfer, this bearish order block, and then a sell there makes sense if this is a valid engulfer, a valid bearish order block, and it looks pretty intense with that doggone rejection wick. 5 minutes. All right, this is a lot of bullish rejection here. Is price going to fill this wick? That is my question. This is what it looks like over 10 minutes. Interesting. All right, it looks like it looks like price is just, we're going to retrace. And we could retrace down to this bearish order block here on the 10 minute, which is probably a 15-minute order block. Yeah, I like that. I like that logic, because there's plenty of demand here. You see how price left this level. So price may want to come down here and then continue higher. All right, because of this impulse, there hasn't been a proper pullback yet. So I can see price coming down here and then going up. But I need this to be valid. And the way you know it's going to be valid is by way of the next candles. Will price come back into this bearish order block for a test and then come down is the question. And we'll see that on the 1 minute. All right. So I got a pending because that's my idea. What? That's not a pending. I have an idea that price is coming back up here. And I will you always put your stop loss above the order block in which you are entering. This is a 1.4 pip stop loss, which is great. Some people say that's ridiculous. This is on the 1 minute, man. All right. And you want to get the best risk to reward on each trade. I'm getting it down to a 1 to 3. Because once price passes that price point, I'm not interested in this trade anymore. You understand? All right. And I want to take this down to what I figure is the more legitimate, what do you call order block, because from here, price moved. Look at this on the 3 minute from. Is this the one I was talking about? Yeah. Yeah. Look at the 5 minute. See how price reacted here and then took off. This one looks legitimate. This one looks legitimate. It's broken some highs along the way. Look at this. Boom, boom, boom. Yeah. Shoot, it could, man. This is, you want to be careful when you pick your TPs. All right. I'm looking for retracement. Price, spend some time on this one. It could very well find a retracement here. It could very well find the bottom on this one. I'm sorry to dither about this, but when you're going through it in live trade, with a live trade, these are the thoughts that are running through my head now. I want to share them with you. All right, so this would give me 3R if price makes it back down here. All right, here I would get 4.3R, and these are not the strongest order blocks, but I'm looking at the retracement here, and I'm thinking this might be the area to retrace from. So this is where I'll be happy with this here, and I'll take 3R for the day. I'll take 3R 80% and leave the 20 to run, and I'm hoping that it comes all the way down to this order block here. That's the way I'm going to look at it. Again, I want to take a look again on the 5 minute to see, am I seeing this in the right way, the way I want to see it? And I think it is. So I'm going to look for price to come on down to there. And I will take 80% at 3R because that's what I'm looking for each day. And if price comes back up, retest that, I'll be looking pretty good. Pretty good. I think price is going to reverse here and then come back through this one and land in this one. We'll see. There we go. We have touched. It is doing exactly what I was hoping it would. The longer it comes down, it's breaking these lows. That means it's going to return to impulse. That's what I'm looking for. A return to impulse. Look at this. If it goes through, that's terrible. Ha ha! Almost to the pip. We are in this trade and we're damn near one to one. Very good. Very good. Now, when do you go to stop break even? I make it a practice to not touch that my stop loss and move it to break even. Too many times price will go to 1-to-1, and then it'll come back. You'll say, oh, 1-to-1, I'll go to break even. No, because it'll come back and knock you out and then continue in the direction of the trade. What you want to do is you want to take money out that covers your risk, that covers all of your risk, and leave your stop loss where it's at, so price can keep you in the trade in case it comes back up to your entry. Does that make sense? All right, take partials. All right, what I do, I'm going to take 80% at 3R. I'm going to take 80% at 3R, and then I'll be at break even, because I'm not going to lose no money on this trade. Nope. Okay. And at 2R, I will remove a partial that covers all of my risk. Do you understand? Good. And we are in this trade. We are making money. I don't need it to repel off of here. All right, where are we at now? I'm just going to measure how much price is gone. We're at 2R right now. I have no more risk in this trade. Got it? I'm out of risk on this trade. I'm leaving my stop loss where it's at. So if it comes back to my entry, I'm still in the trade. If it hits my stop loss, I'm out without a loss. Got it? Good. And we are still hot. Oh, whew. I just had a minor heart attack. We just made a bearish order block here, or bearish engulfer, and I'm thinking price is going to continue down. Yeah. See how it went up, retested that bearish order, that bearish engulfer, and tested it and validated it as an order block, and price is impulsing to the downside. I didn't need you to do that. There you go. Keep going down, man. There you go. All right. And we are coming down to this order block now. And how much am I up? At this point, we're at 4R. I'm already 80%, and I'm out of this trade. I've taken 80% and left a 20% runner. And I'm hoping that it comes all the way down to here. It may reject here, and that's fine. But I got my TP down here, and we're still live. Oh, we are in this thing, all up in it. And look where we hit. Look where we hit. Right here. Right there. Right where at the what they call the median threshold of this, the median threshold of the institutional candle, which is that bearish candle. The last down move, the last down candle before the up move. All right, that is your order block. All right, here we go. All right, now I'm up quite a bit now. We're up at 1 to 5. All right. And I'm looking at where price is. If I start to see price transition here back to a bullish momentum, if it goes past this point, I'm going to just take it. I'm just going to be out of this trade. All right. I want that. That's a bearish order block here. And if it goes past that bearish order block, I don't want to be in the trade anymore. Come on, man. Come on down. Oh, look at that. I'm rich. Anyway, that's how this works. This is the trade I missed this morning. Should have been an 8R trade. Exactly what does that mean? 8R. That's your reward, all right, for your risk, right? If you risk with an 8R trade, if you risk $100, that means you made $800 once you hit your TP. Do you understand? You times that by 8. If you are in a funded challenge, if you're trying to get funding and you got a 100K challenge with FTMO, all right, and you risk 1% of your account size, that means you risked $1,000. You hit this TP, you just made $8,000. You are 2,000 from finishing your challenge in one trade. And I'm talking about this happened at 9:03. Took you an hour. One trade, 1 hour. That is the power of order blocks. That's the power of time frame, higher time frame, lower time frame, macro to micro correlation. This is how you maximize your risk to reward by coming in on the 1 minute time frame, finding that invalidation point with an order block, that protected price point, and say, oh, well, I only need a two pip gap between there and my entry. All I need is that stop loss, and I won't need any more. All right. Some people are saying this is ridiculous. That's impossible. I've heard people say there's no way you get 3 pips stop loss. That's stupid. You're just you're gambling and all that stuff. It's not at all. You find out where the invalidation point is. You find out what the point of an invalidation point is. All right. The block order, the order blocks protect that price. All right. And when you have a protected price point, you don't need a very large stop loss, period. Once price goes past that, you're no longer interested in the trade. All right. You're wrong. All right. Look at this. It's a thing of beauty. Anyway, that was the point of this this video. I know it was longer than it should be. I dithered a lot, and I'm hoping that you'll excuse that. But to see the transition points here are one of the most important takeaways you want to take from this video. You want to watch for those transition points. What am I looking for here? Once price meets this order block, will price transition? Give me my high, my low, lower, higher. That's what I'm looking for. You can see that wherever price pivots. Look at this. All you gotta do is look for it. You'll see it. You'll see it. Look at that. You'll see it. You look for the pivots. You look for that transition from bullish to bearish, from bearish to bullish, and you always look at the higher time frames for price to make those changes. Now, you see we made this move here. What is it doing now? Are we in the midst of a transition? This could be a left shoulder, could be. Uh-oh. We broke through this, invalidated this order block. All right. Are we going to see further declines? Where are we going? Are we coming down here to this one? Where are we going? Where does this this retracement end? Now we are breaking that high. We're breaking this high. We're breaking that high. We got a point here. This is where your antenna goes up. Looks like we have clean action here. Why are we turning here? Is the question. You'll see it on the higher time frame, sure. All right. But if price breaks these, comes all the way up, and then comes back to test an order block, hey man, price just transitioned on you. Oh yeah, look at that. See, price comes back down and test that order block there. Oh, Johnny, we might have another transition of price. And it went up high enough. It went up high enough. It broke these highs, broke these short-term highs. It broke that short-term high. If price comes back here, why not take why not take a doggone buy? Oh, it didn't make it. Hold on. We missed it. We missed it. Yeah, we're looking on the 3 minute. We should have been looking on the 5 minute. You always got to look on the higher time frames. It did make it there. This is where you would have got your buy trade in. And you take This is the one to take. Look at that, 3.4 pip stop loss. This is the one to take because you know it's going all the way up. It's going to end up all the way up here to the stop loss. It's gonna go high, low, and all that good stuff, but it's going to end up all the way up there because the market is bullish, and this is where the higher time frame retracement would probably end. Ooh, we did break. Look at that. Okay, I was wrong on that one. Can't be right all the time. But this looked like a legitimate. It would have been a legitimate trade though, because it got as high as 3.56, 3.5%, 3.5 R. You know, you would have took some profit on that one. Yeah, but as soon as it makes that bearish engulfer, you get out of town because you would have seen that on the lower time frames. Anyway, I spent enough time messing around with you peoples. I hope you all learned something from this. This bus comes. You know, don't worry about this bus. All right, this is the bus. All right, you wait until you get this New York open, and you keep your eyes open for the next 45 to an hour. You keep your eyes open for a setup because it's going to come. All right, and this will be the one that you need that could feed you the rest of the week. You understand? I got 8R on this trade. All right. You know, now I didn't take the trade today. I'm just talking about in this back testing session with you, this replay. But I guarantee you that trade is there every day. And there were a lot of people with my team that actually took that trade, and I didn't. You know, I was being extra cautious. I don't regret it because I didn't lose anything, so no big deal. But it's there for you. I want you to catch that one tomorrow. All right. I want you to meet me back here tomorrow. All right. If you stayed in this video up until this point, you are a serious trader. Leave me a comment, say, hey, I stayed until the end, man. I'm here with you. You're the guy, you're the person, the lady that I want to talk to, that I want to get with, because iron sharpens iron. Okay. I'm gonna sign off now. Make sure you leave a like and a comment, and make sure you are subscribed so you can catch my updates. And I will see you in the next video. Hey, check out the my weekly forecast video. It's on your screen right now. Just click on it and you can check out the setups that I have looking out for the rest of the week. All right, I will see you in the next video.